Good. So, good night, everyone. Once again, tonight we're going to continue to focus on structure, right? Using structure for your entries. So we want to perfect this because as much as trend lines are important, structure is extremely important. And the reason for that is because you need to see structure broken in order to identify whether the trade is going to continue in a buy or continue in a sell, right? And I think that one of the issues that a lot of beginners have and intermediate traders have is that we do not understand true structure and where structure really is. We don't understand where it ends and where it begins, right? And therefore, we get caught in a trade in the opposite direction, or we get caught in a reversal, and we don't understand why it is that the trade has not continued to go in our favor, right? So I want to continue tonight's call on structure. As I say, it's very important, and we're going to mix that with divergence, and we're going to look at some trade setups, and that's how we're going to finish tonight's call. All right, so I'm going to go ahead now and share my screen. Let's go. So first of all, CADJPY got called on the 60-minute time frame today for a buy around 79,831, right? So I'm going to go to CADJPY, right? No, I sent this out today in the Bounceback Telegram group. I gave you guys the take profit points, but for those who are not in that group, you can see the take profit points I have here. So Bounceback called CADJPY for a buy, right? Now, first thing, especially for beginners, when we have a trend going in a particular direction, in this case a downtrend, right? How do you identify when the trend is going to change, right? So we look for a range, right? So you will notice that when a trend is about to change, it ranges in between two price points, right? Which you have here. So let me remove some of these things that may confuse you. Now let's do this from the scratch, right? Good. So you can see here, right, that we have a range in between two price points. I'm going to mark it here, right? And then I'm going to mark it here as well, right? This is the area. Now, for those of you who understand the changing trend, right, you would identify that when a trend is changing, you usually tend to get a head and shoulders pattern, right? So when you're looking for that range, yes, the trade range. So for beginners who don't know how to identify a head and shoulders pattern, right? When the trend is changing, right? So we could see that we had a downtrend here. We tend to look for a head and shoulders pattern. And that's what initiates the breakout now of the trend in the opposite direction. So what I mean by that is you guys should be able to see that we have, right? We have a shoulder here. We have the head, right? So around to this area. And now we basically have shoulder here, right? So you have a head and shoulders pattern. It's an inverted head and shoulders pattern because it's the opposite. So what are we going to do when we see this type of pattern, right? The first thing we want to do is that we want to identify the neckline, right? So the neckline is key because that's the area that we want to see break out. Now, the neckline is not going to be a line. It's not going to be a strong line. You're looking to identify an area. Remember, I always tell you guys, when you're drawing support and resistance, identify an area, right? Do not draw a line because your line might be different to my line. right? And because we cannot be accurate in that perspective, we need to make sure that we identify an area so that we will know that we are right to some extent, right? So using a rectangle box, right? I'm going to start from this candle body, right? And I'm going to bring it all the way across. So this is my neckline. This entire area here is my neckline, right? Why did I choose this area? You can see that when the trade was actually coming down into a cell here, we have exhaustion around this zone, right? When it came back up to retest, we have exhaustion here as well, right? When we created the head, you can see we have exhaustion here. You can see that this is the area that has the most touches, right? So we can identify that this is our support equals resistance area, and therefore this is our neckline, right? So if we wanted to enter this trade and we wanted to be very confident about it, right, we would want to look for this. Let me see if I could get, let me do it as blue. So this is what we want to see, right? This is what we're looking for. So we want to see a strong body candle, right? So we want to see a strong body candle break our resistance area. This is what we want to see. And then from there, right? And then from there, we will look for retest of the neckline before then we continue to buy, right? That's how you want to identify a head and shoulders pattern. So with the head and shoulders pattern, again, you want to identify an area, look for your exhaustion area, right? Support should equals resistance. So you can see the support here. We can see resistance here. And you can see that this is the area that is being touched the most, right? So now to confirm our trade, to confirm our entry, right? To confirm our buy, what we want to see now is the trade actually giving us a solid body break of the resistance zone before we get in for our buy. So if you understand what it is I just said, just type I in the chat box. Perfect. Good. So that has nothing to do with our trend line. Yes, we have the basic rules of bounce back that we need to do, which is draw a trend line, right? And wait for the break of the trend line, etc. But we also want to pay close attention to structure, right? Now, we know what it is we're looking for. We know the area that we're looking for in order to confirm our entry. So we know that we need to wait for this to break, right? But earlier today, when Bounceback called the buy on CADJPY, it was actually forming this, right? The start of the right shoulder. Now, how to identify that a trade is going to give you a head and shoulders pattern, right? Try not to rush the formation of the pattern. So you see this, right? As you see price starts to reject in the area, draw it out. Draw it out. As you see price start to reject in the area, let me, 1 second. Let me make this lighter. When you see price start to form, so let's say, for example, the only data that you had when Bounceback called this trade was that you know that you had, you know, if you didn't know it was a head and shoulders pattern, you could see that you had the market basically reversing and forming loops in this area. So all you need to do is say, okay, well, I could see some loops here happening. Market is reversing in this area. So let me just take my rectangle box. Let me start from where I could see a lot of wicks happening. So you could see a wick here, a wick there, etc. And let's come down to the lowest wick here in this zone, right? And bring it across. Try not to make your zones too big, because somebody might come and say, but wait, I see the wicks come all the way down here, so this is my entire zone. No, right? The trade will have different zones. This is a different zone, right? So this is your zone here. So if you see this happening, right, notice you don't have this data here as yet. Let me block it out, right? You don't have this data. That never happened. When Bounceback called the trade today, all you had was this. So when you look left, the data that you have was that you can see the market is creating loops around this area, right? So you take your rectangle box, you start from the body of the candle here where you can see some wicks, you bring it down to the lowest wick and you carry it across, right? So then you notice that the market is still rejecting in this area as well, right? So we can see that this happened, and there and then it should tell you, hey, I have this rejection here. This came down, also formed a rejection, but it was lower. Maybe this is a head and shoulders pattern. But the only way you would identify if it is truly a head and shoulders pattern is when the market comes back to retest, right? Remember, you still have your zone. So when the market goes up and you see it rejects here and it comes back down to retest, you want to see rejection in the same area that you had over here. If that makes sense, please type "made sense." Right? You want to see rejection in the same area that you have rejection over here. So if it made sense, please type "made sense" in the chat box. Everybody following? Good. So as you can see, once you've identified this area using here to start your support zone to down here, and you just spread it across, notice how the market then comes and respects your zone. Right? So you have the market respecting your zone. It's not breaking below. At some points, yes, it looks as though it's going to sell more, but it never actually broke the zone that you would have identified. So all it takes for you to do is a bit of homework when you're analyzing your trades. Just don't hop into any trade because the trade looks nice. You know, don't hop into any trade because you see a strong body candle, because this was a strong body candle here that we had for the buy. So someone could easily say, but look, CADJPY starting to buy, let me get in it now. And quick, so CADJPY retraces. So you don't want to rush your trade. You want to always do your homework. So once you see a pattern starting to form, you may not identify the pattern, and that's okay. You don't need to always identify the pattern. What is important for you to identify is structure. Right? So if you can see a lot of rejection here, you identify your support area here, right? And then you may not be able to identify that this is a head and shoulders pattern. So you draw another structure, right? Let me lighten that. Right? You draw another structure. So this is your second structure here. So if you don't know to identify patterns, you draw the structure that you see because you are trading that particular pattern. So you need to focus, you need to zero in on that particular pattern because that's the pattern you're trading, right? So I just wanted to do that because I know a lot of persons don't understand how to see patterns and how to wait for your confirmation for your entry. So we see the rejection here. So there we should get our aha moment where we say, okay, right? For advanced traders, they might see that the market actually created a double bottom, right? So we had the market came down here, tested this area, actually moved away from the area and came back before it went back up. So some persons might be seeing this as a double bottom. Some people might be seeing it as a triple bottom, right? You don't need all of that. You don't need all of that trading language as a beginner. Once you can recognize structure, all you need to say is, okay, coach taught me that if the structure is rejected, right, I can look for my buys, right? So if support is rejected, right, look for your neckline. So look for your resistance. If support is rejected, look for your resistance. Don't just buy. Look for your resistance, because once you get a break of your resistance, you're going in for your buy, right? So this is the trade that CADJPY called, right? Take profit zones. So CADJPY was called on the 1 hour time frame. So let's look at the 1 hour time frame to identify our take profit zones, right? So what do we see? I can see this. A lot of exhaustion starting to happen around here, right? So this will be my first take profit zone, right? And then I also see this. I can see something around here as well, right? And then obviously the top of here as well would also be another take profit zone. So always go time frame above to identify areas of rejection, right? Your areas of rejections are take profit zones for you. Okay, so we know where it is that we're looking for the trade to go, right? Now, following bounce back rules, we now need to draw a trend line. So coming from the high, right, and we're going to come all the way down. We've identified our downtrend, right? If you got him when bounce back, if you drew this when bounce back would have called it, your trend line would be here. Your trend line would actually be here, because this is when bounce back would have called the trade. Right? So what you had so far is that you had the trade actually started to break your trend line. So you have a break of the trend line and a retest. So now we're waiting for the market now to push up, right? So you remember that if you're attending my classes, you will know that I use the 50 moving average line also as confirmation that the trade is going in that direction. So as much as we had the break of the trend line, the trade is still below our 50 moving average line, right? So let me remove these. The trade is still below the 50 moving average line. So you still do not have your confirmation to enter the trade as yet, right? So what we're going to wait for now, as I mentioned in the bounce back chart, right? You actually want to wait for two things. And I'm going to put it here. So if you want to, for those who want to be in and out of the market, you can have two situations. You can wait for a trade of 50 to break the 50 moving average line, right? And you could trade it up to this resistance. So for those of you who scalp the market, you could wait for the trade to break this 50 moving average line, and you can have your take profit here at resistance. That gives you about, you can get about 8 to 10 pips or so in that area, right? And then for those of you who are intraday traders, you're waiting for the market to break this resistance. So wait for a structure to break before you buy. All right, so you can go ahead now and take, let's do this. You can go ahead now and take a picture of this. That is your trade for CADJPY. So you can take a picture of that, put that on your watch list. Good. All right. So the next one, I think, was AUDCHF that we had last night. I don't think that really moved as yet. Let's have a look. All right, we know starting to get movement. Good. We're looking good. We're looking promising. So I sent this out last night. We had a bounce back trade call for AUDCHF for sell, right? And you can see that we had a break of the trend line, break of the 50 moving average, but it came back and retested our resistance zone that I would have marked out here. This is why it is key for you to identify the resistance zone. How did I identify it? I came from here, the body of this candle, because if you look right, you can see that going across in a straight line, this is where you have a lot of the wicks. So I start from here, the body of that candle, and I brought it all the way to the top where we have the highest wick there. All right, so that was how I identified there. So you can see how the market actually broke this trend line, came back and retest structure. That's why it's key for you to understand that before it commences and drop. Now, what are we seeing? Today, when I identified this again, I told you guys, okay, so we had the trade actually coming down here to this type of support, right? How was I able to identify this? I left notice that when we actually broke the trend line, right? Notice where the market reversed. You can see some wicks here. So again, all you need to do is identify zones where you see the market is rejecting, right? So once you identify it, stretch it to the right hand side, and you will notice that when the market breaks, it comes back and it respects your zone. That's why it's key to identify it, right? Good. So you won't get tricked out of the trade. And I had here, wait for a support area to break with a solid body candle before we sell. So what's happening now? We got a break of support, right? The trade is ranging, but I do expect this to drop now. And you can take a screenshot of this because I already have, I'm going to just remove that now, right? I already have the take profit zone set there. So for those of you who are not in the trade as yet, let me actually do this, create another zone for you. So for those of you who are not in the trade as yet on AUDCHF, wait for this support zone to be broken with a solid body candle, right? And take profit is here. Good. So remember, you're waiting. Do you need me to put a note there? Let me put a note. Just going to put a note saying wait for structure to break. Right? So you can take a picture of that and you can copy that to your trading view. That's your trade. Right? So you could go ahead, take a picture of that. For those of you who want to trade this longer, I've identified the take profit too. Right here. So you can take a picture of that as well. Right? So obviously, if you're going to write out to take profit too, or you're going to re-enter the market, what you're going to wait for is the same thing to happen here, right? Same thing to happen here, because we identified the zone. So you're going to wait for a structure to break with a solid body candle around here where I would have identified this zone, right? And then you would trade it down to take profit too. Next area. Trading is simple, you know, guys. But I can tell you why a lot of people fail in trading, right? We rush the markets, we rush the setup, we're not patient, we're not committed to learning, we're not committed to sticking to the plan, right? And then once we are in profit, we enter an additional 50 orders because we see that one of our orders is starting to go into profit, right? So we enter 50 orders on top of that saying, whoa, this looks like it's about to sell. Let me enter a standard lot, 3 mini lots, and 4 nano lots because I want to win big. And then if the trade had to reverse on you or had to retrace, your account cannot hold the retracement based on the amount of orders that you have in your account. But if you stick to the plan and you be patient and you be committed, you will notice that trading is simple, right? So patience, we wait for a solid body candle to break, right? Wait for a solid body candle to break. and you're good to go. Just remember to identify your support zones. All right. So I'm going to ask you guys, what do you think? Okay, Paula wanted me to set a stop loss for the new persons. All right, so let me just go back quickly and do that. So stop loss. Obviously, for the stop loss right now, I wouldn't give it because I feel that this trade is going to retrace before it sells. But if it doesn't, your stop loss is always above, in a sell, is always above the last high. So your stop loss, give it a little room, you know. So always above the last high. So if this has a break now with a solid body candle, your stop loss will be above this last high. Right? Give it a little room in case the market had to push. Right? So for example, when you guys would have caught this around here, when it sold here, right? Your stop loss would have been here, around this last high. Or if you would have gone into this trade here when it broke again, right? Your stop loss would have been here if you would have sold here, right? So if you got into the trade here, around this area, your stop loss would be just above that high. So always remember, nobody needs to set a stop loss for you. You can set your own stop loss just by doing your homework. So if you know that you're looking for a trade, you're looking for a sell in a trade, just look for the last high on the time frame that you will use to enter the trade. So if you know that you're looking at a 1 hour trade and you're looking at a particular pattern that you want to trade on the 1 hour time frame, and you come down to the 15-minute for a precise entry, then you're doing your stop loss on the 15-minute time frame. Right? You're doing your stop loss on the 15-minute time frame. So just remember that. Right, guys? So that should do it for tonight. What do you think, guys? Give me some comments in the chat. Let me know what you think about structure. Do you understand it some more? Do you think that you can now identify your own structure and know what areas you need to be broken before you enter a trade? Is it clear? Paula says yes. Paula is the only person that understands. Ria could catch the recording. Who else? What do you think about structure? Who else? We got 28 people on the call. What do you think about structure? You should have been taking some notes and following with me. Perfect, perfect. All right, guys. So as I said, this is a recorded call. Thank you for joining me tonight again. And I will see you guys on the next bounce back call and training. You actually have two trades to look out for. So you have the buy in CADJPY and the sell in AUDCHF. Right? So you have those two trades. You can look out to buy and sell those trades between today and tomorrow. All right. So thank you for joining me tonight and have a beautiful and pitful evening.